Hey guys, welcome to the Bitcoin Fortress Podcast, episode 186. It's Sunday, October 19th, 2025. We are at block height 919829, Moscow time 919 sats per dollar. Mempool fees are at 1, 1, and 3. As always, it's Bitcoin only here, and we got a lot of stuff to go over. So let's jump right in, starting here with the first segment, market action and on chain. So first up here, we got the massive liquidation event, 19 billion on October 10th and 11th, which we covered last week. And of course, that rolled right into the new week. The crypto market suffered one of its largest liquidation waves ever, 19 billion wiped out in around 24 hours. Even with structural tailwind, Bitcoin remains exposed to short-term shocks like this, as we saw. But of course, a fortress mindset means stacking. Yes, but also being mentally ready for drawdowns and using them to reinforce your discipline. So again, for me, I was curious but not too worried because with sats and cold storage, none of that stuff really matters. Trade war, macro shock drains some risk assets. So again, the US-China ongoing escalation triggered a sharp drop with Bitcoin sliding to 104,782 and altcoins off even more than that. But again, Bitcoin's sovereign money, and it doesn't trade in a vacuum. So liquidity, geopolitics do matter. And so it's important for you to be aware of the bigger picture, not just the price charts. And of course, I guess not only stay humble, but stay calm. And of course, October, Bitcoin doing what it likes to do, not necessarily what it's supposed to do. October is heading towards a worst month in a decade. So, despite all the October expectations, Bitcoin is tracking towards its weakest October since 2015. Past seasonality, of course, is a guide, not a guarantee. And when market structure changes, you have to adapt your expectations. And as one of my favorite sayings is, hope is not a strategy. So again, um, stay humble, stack sats, and you don't really worry too much about what's going on. But if you're a leverage trader and you're betting on seasonality, bad things, bad things. So of course, the next question: can a breakout still happen this month? Technical setups say maybe. Some technical analysts calls are saying if Bitcoin can clear 105 to 110, then a move towards 115 plus is on the table. But as we all know, don't mistake probability for certainty. The path forward could be either a breakout or sideways, deeper pullback. So you just maintain your position regardless of which way the ball bounces. Probably max pain would be continued sideways chop for an extended period of time. That just drives traders crazy. Can't make any money on that. Can only make money if it moves up or down strongly. Uh, Institutional flows are showing some mixed signals. So, despite the volatility, institutional flows into crypto remain active, although not always in Bitcoin terms. Ethereum and some other shitcoins are starting to gather some interest. Uh, but of course, the thing to remember here is big money is not monolithic. Some is buying, some is hedging, some is exiting. So your stance needs to be independent of the herd. On-chain structure is revealing some fragility. So again, the recent crash highlighted thin liquidity, heavy leverage, and structural risk in derivatives markets. I would say probably mostly in the altcoin space, but Bitcoin certainly didn't get left out of that. Price, of course, is one part of the system, but the plumbing matters too. And your fortress isn't just the treasury box, it's the network that supports the asset. So again, Bitcoin, not shitcoins. There is no second best. And so that wraps up market action and on-chain. Uh, Pretty wild week. Uh, and we'll see what next week looks like. Next up, we'll take a look at adoption and institutional channels. So, first up, UK retail on-ramp. There's a new exchange-traded product from BlackRock. BlackRock launched a Bitcoin-linked ETP targeting UK retail after regulatory easing. So, again, another on-ramp, good adoption story. Um, Again, more access points equals the deeper demand base, which is great for the long term if you zoom out. But it doesn't mean you time the market perfectly. And of course, institutional buyers uh, are sellers at a certain price. So you have to remember that it's a two-way street. Corporate treasury mania is under scrutiny. Of course, the summer of paper Bitcoin collapsed quickly, and many of the Bitcoin treasury companies, including some of the OGs, are trading at prices below the Bitcoin that they actually hold, which is opportunity. Don't know. It depends on if you like investing in that kind of stuff or not. Um, But analysts are cautioning that many companies with crypto treasuries aren't operating full strategies. And there are, of course, a lot more of them now. I mean, it was just MicroStrategy, and now there's, I don't know, 10, 20, 30, 40, 50, 100 different companies. But holding Bitcoin is simple. Turning a company into a treasury is complex. So for us individuals, hold the asset and don't get distracted by wrappers. But if you like investing and like the Bitcoin theme, then Bitcoin treasury companies might be worth looking at right now since they're pretty beat down, including well, obviously MicroStrategy is traded down quite a bit, and so is Metaplanet. Um, That one's, I think, now below its Bitcoin stack. So, as far as all the other ones go, I don't know. It's, if you're going to invest in Bitcoin treasuries, you probably want to go with the larger ones, since who knows what's going to happen with the smaller ones? Will they make it or not? The wealth rotation narrative: gold out, Bitcoin in. Don't know. Gold slipped. I think it was on Friday after running up. Like the chart looks like a parabolic chart, which is always a little concerning when you see that, because it has to correct at some point. But Bitcoin does sustain its relative strength in light of that, and a potential signal perhaps of some rotation, Bitcoin being underpriced relative to gold. It's not definitive yet, but it's worth watching. So keep your eyes on large tickets, not just your ledger. And, maybe we will get a correction uh, in gold down and Bitcoin up. Um, Typically, Bitcoin follows gold with a lag, if you look at some historical charts. And so everybody's kind of looking at that and wondering if that's going to happen. But I always like to say that Bitcoin does what Bitcoin does. Next segment, we will talk a little bit about freedom tech, privacy, and infrastructure. So, First up is a quote from Jack Dorsey: Bitcoin is money, not crypto. So Dorsey last week reiterated Bitcoin's role as money rather than just another token. And again, this aligns perfectly with our thinking. Our focus is really on sovereignty and money, not on speculation. And of course, Jack Dorsey unlocked the ability to basically transacted Bitcoin and hold Bitcoin on your balance sheet for the 4 million or so merchants that use Square for their transactions. So it'll be interesting to see over time how many of those merchants accept Bitcoin, how many of them actually keep some of it as treasury for their company versus liquidating it for the nasty fiat. DeFi meets regulation, FinTech Week in DC. So there were discussions that emphasized how decentralized finance must square with regulatory compliance. Also, Michael Saylor gave a pretty cool keynote speech there. You could find it on YouTube. It's not that long. I think it's like 40 minutes or something, but worth listening to. Again, he kind of talks about the bigger picture. Again, the tech world has built the rails, but now regulation is entering the frame, and so that's actually a good thing for a lot of reasons. And then, but of course, we want to remain sovereign regardless of what the regulatory climate is. One of the things Saylor talked about was just how dramatically the regulatory environment changed with the change in administration, where you had, I think in the prior administration in Washington, you had maybe of all the cabinet members, none of them knew anything about crypto, and one of them was basically a skeptic. And now you have the entire cabinet is basically savvy about crypto, Bitcoin, etc. It makes a big difference in terms of uh, what type of an agenda they're driving. So, and he did talk a lot about stable coins. He talked about the use cases for some of the other chains, which I'm not going to get into here, but there are, you know, digitization of corporate securities. There's an opportunity there. Why he he's right. It takes months to take a company public, and it costs a lot of money, and it's a lengthy process. And if a small business want to raise capital, um, doing so in a digital token format could be a lot more efficient for them and lower cost, and would give more companies access to capital. So can't deny that. Should it be on the Bitcoin blockchain versus on the Ethereum blockchain? I don't know, but you can't deny that. So anyway, check out that video. It's pretty interesting. Moving on, self-custody and Rails matter more than price. So again, more commentary this week on the Lightning Network, on federated wallets, and self-custody improvements. So again, growing the network and the control layer is just as important as hodling. Usability matters for long-term adoption. And so there's been a lot of effort in that space to improve the ability for people to interact with Bitcoin privately, and also efficiently. So it's not you know overly complex, and that's all very good to see. Next segment, we're going to talk about policy, regulation, and macro crosscurrents. So the FSB has noted some significant gaps in global crypto regulation. The Financial Stability Board flagged uneven regulation across jurisdictions on October 16th. Regulation is a backdrop, not a story, but staying informed is part of having a fortress. And so you can't just be ignorant about what's happening out there in that environment. Um, and again, it's interesting to see because different jurisdictions have taken a different approach on crypto. Of course, the EU seems to want to stamp it out and replace everything with digital, the CBDCs. And of course, we all know that you can't. You can't stop it. Uh, you can only hope to contain it, but of course, they can make lives miserable for people who hold crypto unless their life is completely miserable already. Like many people in authoritarian countries with hyperinflating currency, in which case it's very easy for them to turn to Bitcoin or other cryptos or stable coins to hide their money from the state, and nothing's stopping them. So, but that's not really any way to live now, is it? Next up, U.S. regulator admits being behind on crypto rules. So this is sort of refreshing. The Securities and Exchange Commission chair said that the U.S. is, quote, a decade behind in crypto regulation. So an admission of delay often precedes action. So I think we can expect some movement, not just headlines here, but it is refreshing to see the government admitting when it's wrong, which they don't really do very often. Of course, it's easy to do when it's not on your watch, I guess. Next up, 14 to $15 billion worth of Bitcoin was seized from a global scam. So the US and UK authorities seized a massive amount in a pig butchering infrastructure bust. I think it was located in Cambodia or something. This is part law enforcement win, but part reminder of risk. And again, the government is looking for budget neutral ways to grow its Bitcoin stack, and there's nothing better than stealing Bitcoin from criminals, which the US government has done a great job of. And so I think now their stack is over 300,000 coins or something like that. So it's pretty substantial. But again, custody and personal sovereignty matter the most. So, number one, don't do anything illegal. But if you do, because it's kind of hard to keep up with the laws, make sure your stack is hard to get to. So don't make it easy. But of course, don't scam people out of their Bitcoin. That's not nice. Next up, stablecoin near disaster. So this one, it was kind of like, I mean, I know a lot of folks in our space followed this particular news item, but it really didn't get a lot of mainstream attention. It was kind of like, oh well. So anyway, what happened here? $300 trillion of PYUSD was minted in error and had to be burned. So again, the slide of stablecoins can ripple into the Bitcoin markets too. There's operational risk everywhere. The funny thing about $300 trillion is that's more money than exists in the entire world. So, and it was literally a fat finger. So again, crypto is not Bitcoin. And if you're holding Bitcoin, you certainly don't have to worry about something like that happening because it's not in the code anywhere. But just again, something to watch. They were honest. They came out and let everybody know. But I think some people noticed that their number of coins they'd issued went up quite dramatically. So anyway, stable coins. Use them at your own risk, I guess. Bitcoin is still tied to global liquidity and trade war risk, as we've seen over the past couple weeks. The recent crash kind of brought it home. Bitcoin is exposed to macro waves just like any other asset, so it's good to be aware of it. But again, it shouldn't drive any type of reaction or short-term uh, thinking on your part. You are stacking sovereign money, but again, you're not immune. So just stay aware of the risk. Don't be afraid of it. And certainly when there's liquidations happening and people are losing their stack, you could feel good knowing that you have your Bitcoin safely stored away in self-custody. Next up, let's take a look at mining infrastructure and backend. Now, mining business is continuing to evolve as really power first, not coin first, as it first started out. Many observers are noting this shift, with miners increasingly positioned as infrastructure data centric firms. So, again, they're finding a very rapidly growing customer in the AI compute space. And this, of course, will increase the network resilience over time because these companies will have diverse revenue streams, not just Bitcoin mining. That should help them stay in business longer, and especially if there's a bear market or whatever, which tends to cause shakeouts in the miners that are less well capitalized. So, and again, the continuing story on hash rate stability despite the price weakness. So the hash rate remains strong, continues to hit all-time highs, and then the miners are continuing to accumulate through weakness. So they're not selling their coins. I think I even read that some of them even bought the dip. So there. Um, of course, security of the network matters as much, or I would say even more than the price, and keeps our coins safe. So again, doesn't get a lot of media attention, but the continuing rise in hash rate just means that the network is getting more and more secure as time goes on. And as Jeff Booth likes to say, as long as the network stays decentralized and secure, um, that's where you want to be. Taking a look at the meta and market structure next. Um, Next up, a question. Is the classic 4-year halving cycle broken? Um, Much research has been focused on this and is questioning whether the old cycle models still hold, which is, 4-year cycle, you know, bull market, blow off top, crash, 80% drawdown, 70% drawdown, 50% whatever. Bear market, and then bull market starts kind of close to the halving, another halving, and so on and so forth. That's the traditional cycle. The reality is you can't time the cycle reliably. You just have to focus on your habits. So stacking, self-custody, patience seems to work best. And when you zoom out and look back over time, you're usually pretty happy with your result. I mean, I think if you've been stacking for a few years now, other than the stuff you bought recently, you're probably in a profit and a pretty good one. So, in fiat terms, which again is probably not the right way to look at your stack. And what you should probably look at instead is, do I have more Bitcoin now than I did at the beginning of the year? And that's kind of how I'm trying to think about things. Um, it's just getting harder and harder to acquire large amounts of Bitcoin just as the price goes up, but that's the goal. Next up, derivatives and options markets widen the path dependency. So, with large liquidations and skew, the path forward could swing violently. So there could be some big drops followed by big spikes, followed by big drops. And one of my favorite graphics that gets posted online a lot is the Weimar Germany gold to the German mark chart. And if you look at that chart, of course, it goes parabolic over time, but there's huge drawdowns and spikes and drawdowns and spikes. But if you just held your gold through that, you were just fine, and maybe could buy some cheap stuff when things settled down. So the fortress includes tactical flexibility, not just conviction. So again, if you see a dip and you have some cash, buy the dip. If you still have chairs, what is your excuse? Next up, sentiment at extreme fear levels. So, is this a contrarian moment? Sentiment indicators show fear, which could be an entry point or it could be a warning. Who knows? Fear isn't a buying signal alone. Discipline does matter. And of course, if you're just dollar cost averaging, like I do every paycheck, put the same amount, you're fine. If you're trying to put a large amount of money to work, be like Michael Saylor. Don't just buy. Um, don't wait for the right time. Just buy and hold. All right, moving on. Culture and adoption tidbits. So there is a Bitcoin documentary release on major platforms. This is the media story of the week. Bitcoin documentary drops on Apple TV, Amazon, etc. I have not checked it out, full disclosure. I don't know if it's good or bad, but it might be worth checking out. Cultural penetration does matter. And so the more people are aware of Bitcoin and the more the conversation becomes mainstream, the better it is for adoption and for continuing to ensure Bitcoin is a winner, which it already, some people say it already has one, but you gotta stay on top. Start 9, Fedimint updates and federated custody tools up next. So infrastructure for self-sovereign hosting continues to improve. And so picking a Start 9 server, which I guess is, basically your own server, your own cloud, so you can put all your data. You can get all your data out of iCloud, off of Google, off of all the places where you have to rent and where they get to have access to your data and put it on your own server, and you can just access it yourself remotely. I think there's some tools you can basically tap into it from your phone remotely. And of course, you can run your Bitcoin node on there, and then you can do all your transactions and check everything on there as well. So, not a bad tool. I have not, full disclosure, I've not set up my own server yet, but I may when I have a bit more time in the future to take full custody of my data. Lightning payments in new contexts, e-commerce and messaging. So there are some emerging use cases for Lightning in payments and messaging this week. Using, I guess Lightning payment links and right now you can do it on Nostr very easily. You can post an invoice, people can pay it. You could zap people. But getting it onto messaging platforms to where you just click a link and then you can just send Bitcoin from your wallet that's connected to that is a really good thing and actually enables commerce, running a store, things like that. So using Bitcoin is important. And I try to whenever I can. Um, I just bought a tap signer recently I'm trying out a new wallet that it works with tap signer, and I paid in Bitcoin. They give you a discount, whatever, but it's and I just used the Bitcoin and then I bought more, so I just paid and refilled. Um, so it is good to use Bitcoin for payment, and on-chain fees are pretty cheap right now too. So why not? The sovereign money narrative remains alive. The reemergence of Bitcoin as non-state money theme in multiple podcasts and articles, and we'll go through that down a little bit later. So it keeps the philosophical root intact amid a lot of noise, especially pigeonholing Bitcoin as just digital gold and not as really a payment tool. Education and content expansion. Bitcoin is reaching mainstream, so there are more accessible materials this week, which signal broader awareness. As we mentioned with the release of the new video or documentary, and of course, there's a lot of Bitcoin content available on YouTube. A lot of great podcasts and shows, so it's good to see that continue. Open source grants, developer tools, protocol upgrades were also referenced in podcasts this week. And again, all this type of thing strengthens Bitcoin, strengthens the network, and allows for um, broad use cases throughout the world. Freedom money. And let's see, this week's podcast discussions again emphasize multi-sig, custody, insurance, sovereignty. We'll get into that in a little bit. Um, and finally, Q4 sanity check. So everybody's, again, expecting Q4 to be great. Will it be a breakout or a sideways chop? Max Payne. We'll see. Combining technical, macro, and structural noise, the question for Q4 is clear. Will Bitcoin escalate or will it stall out? And your defense is the same either way. You just keep stacking, keep holding, ignore the noise, and I don't know about you, but I feel good when the price is going up, and I feel poor when the price is going down. But it don't change what I'm doing with my stack. It doesn't even really interact with much with my Bitcoin anymore, which is good too. It's much better than having a brokerage account and having to watch what's going on there every day and figure that out. Looking at the podcast recap here. So this week on Bitcoin Audible, which was 147, they did a deep dive with Rob Hamilton of Anchor Watch on how multisig, insurance, and institutional custody are evolving. I have looked into those products myself, and I suppose at some point, if you get enough Bitcoin and you get old enough, you get worried about being able to maintain your self-custody. Those a solution like that might make sense. It's multi-sig, it's multi-institutional, so it's not like, any one institution controls the keys, I think. And it also has insurance, but they charge a fee. So, that's the thing. Obviously the cheapest uh is is self custody. The next cheapest is probably collaborative custody, like with an Unchained or River or somebody like that, where you hold two keys. You might have to pay a little bit of money every year to maintain a vault, but it's very low cost. But things change if it starts to become truly generational wealth. And again, if you get older, you get a little worried about your setup or maintaining it. It's always good to have other options, and hopefully they stand the test of time and show that they're trustworthy. On Rabbit Hole Recap 379, Odell and Marty talked about, the title was Stay Humble, Stack Gold. They had some infrastructure updates on Cashew, on Signal, which I talked about a little bit earlier, using messaging applications for payments. Cashew is a federated mint that I think it's Bitcoin going in, but then it creates like tokens, and then it's private. You can use it, but of course, there's always risk associated with Fedimint, so you wouldn't want to put a lot of money in there. You rely on the federation of being the people that run the mint to be good actors, that sort of thing. They also talked about the recent flash crash. Um, so the theme is crystallizing. Sovereignty, self-custody, tech rails, and habit stacking matter just as much as price moves, and we continue to see that in the podiverse. Did want to mention this week's featured Substack post, Bitcoin and the Parable of the Talents. And we'll put a link in the show notes for you to that. In this particular piece, I walk through why stewardship matters, why time preference is the real edge, and how stacking Bitcoin is part of building your own fortress. Did want to mention my books, which are out now in multiple formats. And again, links to these will be in the show notes as well. First one was Bitcoin Fortress, a simple guide for beginners. So, kind of a basics book and useful for orange pilling. Then I put together the Bitcoin retirement plan, which and estate planning, which is kind of a comprehensive look at taking traditional estate and retirement concepts and how they apply to Bitcoin. So check that out if you're interested. And then I also wrote the Bitcoin Lifestyle, which is more of a philosophical book on how to live your life and live your life better with Bitcoin. So check that out. And as always, thank you for listening to the show. Please keep stacking, stay sovereign, and stay strong. And I will talk to y'all next week. Bye bye.